Most newcomers to Canada think they have to pick a side between RRSP or TFSA, but here is what nobody tells you. The smartest immigrants use both accounts together, and there is a simple trick that can add thousands to your wealth over time. Here's the secret. You contribute to your RRSP first and get a nice tax refund from the government, then take that refund money and invest it into your TFSA. It's like getting free money to grow tax-free forever. And today, I'll show you exactly how this works with real numbers. We'll use a 60,000 income, for example. Whether you are single or married with kids, I will walk you through the step-by-step plan. You will learn how much to contribute, when to expect your refund, and how to avoid the costly mistakes that traps most newcomers. Let's break down why this strategy works so well for newcomers. Your RRSP gives you immediate tax relief money back into your account, back into your pocket right now. Your TFSA gives you tax-free growth forever. No taxes when you take out the money, even decades later. Here is the math that matters. If you're earning about $60,000 a year, you're likely in about 30% tax bracket. That means every dollar you put into your RRSP gets you roughly 30 cents back as a tax refund. So if you contribute $6,000 to your RRSP, the government sends you $1,800 back. Now, here is where most people mess up. They get that $1,800 refund and spend it on a vacation or pay down some bills. But what if you took that entire refund and invest it in your TFSA instead? Let me show you a real example. Sarah is a newcomer earning $60,000 in her first year. She contributed $6,000 to her RRSP. Come tax time, she gets an $1,800 refund. Instead of spending it, she puts the refund back into her TFSA and invests it in a simple index fund. That $1,800 grows tax-free for the rest of her life. If she earns 6% per year, it becomes $3,600 in 12 years, $7,200 in 24 years, all without paying a single penny in taxes when she takes it out. But Sarah doesn't stop there. She repeats this every year. Year 2, another $6,000 RRSP contribution, another $1,800 refund into TFSA. Year 3, same thing. After 10 years, she puts $18,000 of government refund into her TFSA, and it's now grown to over $25,000, completely tax-free. You're starting fresh in Canada, which means you have decades for this money to compound. A 30-year-old newcomer who starts this strategy could have over $200,000 in tax-free TFSA money by retirement, just from investing their RRSP refunds. Now, let's address the confusion that stops most people. You are not choosing between RRSP and TFSA. You are using them together like a team. The RRSP reduces your taxes now and gives you that refund. The TFSA grows that refund tax-free forever. Here is what you need to know about contribution limits as a newcomer. For RRSPs, you can contribute 18% of your previous year's income, up to the annual limit. On a $60,000 salary, that's $10,800 you can put in. For TFSAs, you get contribution room starting the year you turn 18 and become a Canadian resident. If you are new to Canada, you only get room from the year you arrive, not the previous years. On a $60,000 salary, that's $10,800 you can put in. For TFSA, you get contribution room starting the year you turn 18 and become a Canadian resident. If you are new to Canada, you only get room from the year you arrived, not for previous years. This is actually perfect for our strategy. You don't need massive TFSA room to start. Even if you only have $6,000 in TFSA room, that's enough to invest your first few years of RRSP refund. The timeline advantage is huge. Every year you wait is a year of compound growth you're giving up. That 1,800 refund invested at age 30 could be worth 20,000 by retirement. The same 1,800 invested at age 40 might only grow to 10,000. One more thing, this strategy works even better as your income grows. You get a promotion to $80,000, your RRSP refunds get bigger too. More refund money means more TFSA growth. It's a wealth building system that scales with your success. Let's get specific about how to make this work for your situation. I'll walk you through exactly what to do, whether you are single or have a family. If you are a single newcomer earning 60,000, here is your game plan. Start by contributing 6,000 to your RRSP in your first year. That's about $500 per month if you set up automatic contributions. Do well within your contribution limits and gives you a solid 1,800 tax refund to work with when you file your taxes in March or April. You will get that refund. When you file your taxes in March or April, put the entire 1,800 straight into your TFSA and invest it in a low-cost index fund. If you are new to investing, a simple balanced ETF that holds both stock and bond is perfect to start with. Now, let's talk about married couples. If you are both earning around 60,000 each, you have some choice to make. The spouse in the higher tax bracket should prioritize RRSP contributions first because they will get a bigger refund. But here is a smart move. You can also split some contribution so both of you build RRSP room for the future. Good starting point is for the higher earner to contribute $8,000 to their RRSP and the lower earner to contribute $4,000. This gives you about $3,600. Split this money between both TFSA's accounts, giving each person $1,800 to invest. For families with kids, you need to balance this strategy with other priorities. You still want to do the RRSP to TFSA move, but maybe start smaller. Consider contributing $4,000 to RRSPs in your first year, which gives you about $1,200 in your refund for your TFSA. Use the money you would have put towards larger RRSP contribution to build an emergency fund first. Family needs that safety net. Don't forget about RRSP for your kids either. A good rule of thumb is to get the maximum government match on RRSP first. That's $500 per child. Then focus on your RRSP to TFSA strategy. Here is your month-by-month action plan. January through December, make your monthly RRSP contributions. In February, start gathering your tax documents. File your taxes by March or April. Don't wait until the last minute. When your refund arrives, usually within 2 weeks if you file electronically, immediately transfer it to your TFSA or invest it. Now, let's talk about avoiding costly mistakes. The biggest trap is withholding tax on RRSP withdrawals. If you ever need to take money out of your RRSP before retirement, the bank automatically take taxes off the top. For amounts up to $5,000, they withhold 10%. For amounts between $5,000 and $15,000, they withhold 20%. This is just a prepayment of taxes you will owe, but it can mess up your cash flow. The key is to avoid early RRSP withdrawals unless it is a real emergency. That's why having your TFSA as a backup is so valuable. You can withdraw from your TFSA at any time without penalties or withholding taxes. What if you mess up and contribute too much to your TFSA? The penalty is 1% per month on the excess amount. If you cash it quickly, withdraw the excess and you will only pay a small penalty. The CRA is usually reasonable if you fix a mistake fast and explain what happened. This simple strategy can add tens of thousands to your wealth over time. The key is starting now and stay consistent. Your homework is to calculate potential refund based on your income and set up automatic RRSP contribution this month. Remember this, you are not just saving money, You are building a financial foundation that will serve your family for decades. Every refund you invest today is money that grows tax-free forever. Subscribe for more immigrant-focused financial strategy, and I'll see you in the next video. Thanks for watching.